Technologies Limited Q3FY22 earnings conference call, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishit Jalan from Axis Capital. Thank you, and over to you, sir.
Thank you so much. Good morning, everyone. Welcome to Q3 FY22 results conference call of Analysts Technologies. From the management team, we have with us Mr. Anurag Jain, Managing Director, Mr. Ramesh Gehani, Director and COO, Mr. Massimo Venuti, Director and CEO, Endurance Overseas Business, Mr. Satyajit Ray, Director and Group CFO, and Mr. Raj Mundra, Treasurer and Head Investor Relations. I'll now hand over the call to Mr. Jain for his opening remarks, post which we can start the Q&A. Over to you, Mr. Jain.
Thank you, and good morning to everybody. I would like to share details of how we have done in the third quarter of this financial year and the first 9 months also of this financial year FY22. India in the third quarter of FY22, as per CM data, two-wheeler industry sales de-grew by 19.7% compared to the previous financial year. Scooters de-grew by 25.87% and motorcycles de-grew by 16.38%. The automotive industry as a whole in India had a de-growth of 17.2%. In Europe, in quarter 3, there was a de-growth of 23.4% in the European Union automotive sales. On the financials, I will briefly talk to you about the third quarter of FY22 and then the first 9 months of FY22. During quarter 3, our consolidated total net income was rupees 18,965.89 million as compared to rupees 20,467.03 million in quarter 3 of the previous year. Consolidated EBITDA was rupees 2,106.74 million as compared to 3,579.71 million in quarter 3 of FY21. Consolidated EBITDA margin was at 11.1%. The net profit was rupees 946.36 million at 5%. There was no Maharashtra State mega project incentive in this quarter, in quarter 3. There was also no net debt as there was a positive cash available of rupees 3,785 million. During quarter 3, our standalone total income was rupees 14,939.05 million as compared to rupees 15,320.49 million in quarter 3 of FY21. Standalone EBITDA was rupees 1,699.50 million as compared to rupees 2,632.90 million in quarter 3 of FY21. The EBITDA margin was at 11.4%. Standalone net profit was rupees 878.46 million at 5.9%. There was no Maharashtra State mega project incentive in quarter 3. The reasons for lower EBITDA margin percentage as a whole, firstly in India, was due to the large commodity price increase, mainly in aluminum alloy and steel rates. There was no mega project incentive in quarter 3 of this year as compared to quarter 3 FY21, which had a mega project incentive of rupees 239 million. There was a drop in volumes in quarter 3 of FY21, leading to a loss of contribution on lower sales. In quarter 3, the two-wheeler industry, as I mentioned earlier, was down by 19.7%, largely due to the chip shortage. As far as Europe is concerned, the lower EBITDA margin has been deeply affected due to the high drop in passenger car volumes due to chip shortages and a huge increase in power cost, which will be later explained by Mr. Massimo Venuti. During the first 9 months of FY22, our consolidated total net income was rupees 54,987.02 million as compared to rupees 44,379.61 million in the first 9 months of FY21. Consolidated EBITDA was at rupees 7,358.64 million as compared to rupees 7,318.77 billion in the first 9 months of FY21. Consolidated EBITDA margin was at 13.4%. The net profit was at rupees 3,245.21 million at 5.9%. This includes the Maharashtra Mega Project Incentive for rupees 590.43 million for the first 2 quarters of this financial year. During the first 9 months of FY22, our standalone total income was rupees 574.16 million as compared to rupees 31,850.57 million in the first 9 months of FY21. Standalone EBITDA was rupees 5,465.87 billion as compared to rupees 5,057.19 billion in the first 9 months of FY21, with an EBITDA margin of 13.1%. Standalone net profit was rupees 2,670.09 billion at 6.4%. This includes the Maharashtra State Mega Project Incentive of rupees 590.43 million in the first 2 quarters. There was no net debt and there was a positive cash available of rupees 2,788 billion. The detailed financials available with the stock exchanges and on the Endurance website. I would now like to share certain key points for the first 9 months of this financial year. In the first 9 months of FY22, 75.6% of our consolidated total income, including other income, came from Indian operations, and the balance 24.4% came from our European operations. In India, in the first 9 months of FY22, rupees 5,854 billion of new business was won from OEMs other than Bajaj, which included HMSI, TVS, Hero Motor, Royal Enfield, and Ather Energy. It included rupees 1,390 million new orders for EVs, including rupees 530 million orders from Ather for brakes and rupees 700 million orders for the Polarity Smart Bike, the company in Chakan, Pune, for suspension and brakes. New order win also includes non-automotive casting business of approximately rupees 1,000 million for applications like gensets and the 5G telecom. These businesses will start in April 2022. I would like to mention that we have rupees 18,936 million worth of requests for quotes from the OEMs. We're happy to announce that we have added a new product vertical, which is the drive shaft. The drive shaft is a high technology proprietary product in an automotive application. A drive shaft transforms the torque generated from an engine through its transmission to the wheels. The application is for 3-wheelers and 4-wheelers, including some LCVs. A drive shaft is an EV agnostic product required for EVs also. It has lucrative margins and competition in India is mainly from G10 driveline and next year automotive. The Indian drive shaft market is approximately 20,000 million per annum for 3-wheeler and 4-wheeler applications. We are starting business with Bajaj Auto in May 2022 as a new state-of-the-art plant and already set up at Baluch, Aurangabad. We are at an advanced stage of orders from TVS for 3-wheelers and from Mahindra for 3-wheelers and 4-wheelers, including for the EV applications. We have already filed 5 patents to make the product superior to competition. Our shortened development times, competitive price, our world-class manufacturing, and a strong supply chain is a USP, which will help us in business growth in the future. At Endurance Overseas, we have acquired 100% stake in a small company called Vicoli SR Italy. Vicoli enables fleet operations to increase route efficiencies, enhances safety, optimizes maintenance activity, and lowers fuel costs. This is done by monitoring vehicle movement, engine parameters, and driving habits of Vicoli's software platform. With this acquisition, we seek to expand our innovative solution offerings in the mobility sector in Europe. I would like to mention that Endurance is focusing on a more value-add and profitable product mix in its future business, which includes braking, suspension, and casting supplies to 2 and 3-wheeler OEMs and startups, 200cc plus motorcycle brakes and clutch assemblies with help of acquisition of Adler in Grimika in Italy, in the year 2020. The 200cc plus motorcycle brakes business has already started from October 2021, and the 200cc plus motorcycle clutch business will start in the next financial year. Our other product mix focus areas are the paper-based clutch assemblies, replacing fork-based clutch assemblies for motorcycles with a higher value add. We're starting continuous variable transmissions or the automatic clutches for scooters. We are at an advanced stage with Hero MotoCorp, where the testing has already been cleared. We are also increasing the anti-lock brake systems or ABS business for 150cc plus motorcycles with our collaboration with Beijing West Industries. We started supplies to Bajaj Auto and from September 2021 onwards. We're also increasing our business of 200cc plus motorcycle inverted front forks and adjustable rear monoshock absorbers. This is with the help of our collaboration partners KTM and Beijing. We are working with KTM to increase supply of both on-road and also start with off-road motorcycle, higher technology inverted front forks and rear shock absorbers. And we have made a 3-year plan for it, and the volumes will substantially increase in the next 3 years. We are focusing on also fully finished machine castings as compared to raw casting and semi-finished castings for 2-wheelers, 3-wheelers, and 4-wheelers. As far as disc brake assemblies are concerned, this business is growing with addition of Bajaj, TVS, Royal Enfield, Yamaha, Hero MotoCorp, and HMSI new business. We are increasing supplies of disc brake assemblies from 285,000 brake assemblies to 570,000 brake assemblies a month, and this from 375,000 numbers a month to 675,000 numbers a month by March 2022. We have the capacities in place. Our second plant at Baluj, Aurangabad has already started operations. In September 2021, we also started supply of aluminium cylinder head low pressure air castings at our Pantnagar, Uttarakhand plant. This order is for 720,000 machine cylinder heads per annum. As mentioned earlier, we have already started 2-wheeler ABS assemblies from September 2021. I'm really happy to inform you that from this evening, we are starting ABS assembly supplies to also Royal Enfield. Our plan is to reach a run rate of 400,000 ABS assemblies per annum by September 2022, which is mainly due to the short supply of the ABS ECUs, which are dependent on, as you know, the chips. As you may be aware, competition is mainly from Bosch, which controls the major market share in the Indian ABS motorcycle market, which requires approximately 3 to 3.5 million ABS assemblies per annum. This is a large business opportunity for Endurance, as there are very few suppliers, and all are foreign companies due to the higher technology requirement. We also focus on supply of our products for EV 2 and 3-wheelers. We have already started supplies of brake assemblies, suspension, and aluminum castings for electric scooter and 3-wheeler. Our focus is to supply our EV products to 2 and 3-wheeler OEMs, both existing and new, including Ola Electric, Ampere, Okinawa, Ultraviolet, Ather, and Hero Electric. We are also focusing on e-bicycles business, not the e-bikes, but the e-bicycles, especially for our suspension and brakes. And we're already in advanced talks with certain OEMs. Due to increased orders from Bajaj and Yamaha in India and a new rupees 1,446 million rupees alloy wheel order from TVS, which we recently got, we have added a new plant at Chakan to help increase supplies from 240,000 alloy wheels a month to 320,000 alloy wheels a month. This plant will start operations in this month. The supplies to TVS will start in June 2022. As far as Europe is concerned, till Q3 of FY22, we are happy to inform you that we have won 53.91 million euro of business from Porsche, Daimler, CNH, BMW, and Stellantis. This includes a recently won 40.5 million euro new order for transmission housings for the mild hybrid and the full hybrid EV applications for Stellantis. This business will start in second half of 2023. I would also like to point out that Endurance, both in India and Europe, is actively pursuing its focus on gaining access to new technology and focusing on new product organic and inorganic growth. I would also like to mention that Endurance has entered 2 backward integration product areas, which are import substitutes also. First is aluminum forging axle plants required for inverted front fork requirements. Endurance has entered into a technical collaboration with SGM Italy, and supplies will start at Aurangabad plant from this month. The second product is a wire steel braid hoses for ABS applications and mid and high-end bikes. This supply has already started in June 21 from Aurangabad plant. Both these above projects will help us in our future profitable growth. In the first 9 months of this financial year, our aftermarket sales grew by 50% from rupees 1,917 million in the previous year to rupees 2,874 million in this financial year. We are exporting aftermarket parts to 30 countries, and we are adding 4 more countries in the next financial year, most probably in the first quarter of the next financial year. We have also started, as mentioned earlier, trading in 2- and 3-wheeler tires for both India and exports. The export sales for India standalone business increased by 22.7% from rupees 1,162.4 million in the first 9 months of FY21 to rupees 1,426.12 million in the first 9 months of this financial year. On the environment front, I would especially like to mention Endurance is striving to being carbon neutral in its plants by effective use of solar power and wind power, creating carbon sinks by driving tree plantations and thereby creating dense forests, and driving use of natural gas and LPG in place of electric power and furnace oil. We are focusing on lowering hazardous waste generation and to achieve zero waste to landfill. At Endurance, it will be a continuous endeavor to grow through organic and inorganic growth with a focus on technology upgradation, quality improvement, cost, and environmental health and safety. We will do our best to fulfill all our stakeholder expectations by following our 5 values of customer centricity, integrity, transparency, teamwork, and innovation. With these opening remarks, I would now like to invite questions from all. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on a touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir. Firstly, on this euro power cost impact that you highlighted,
Yes.
What is the power cost in percentage of sales in Europe, and by when? What is the increase and by when we can pass on the impact to customers, or we cannot pass on?
Okay, I'll request Mr. Massimo Venuti to answer this. Massimo?
Yes. The impact in the third quarter 2021-22 in the European market was 2.8 million euro only due to the increase of energy cost. Please consider that the average of price of gas in Endurance received in the last 3 years was more or less 20 euro per megawatt, and in December we reached 166 euro. With an average of 100 euro per megawatt, 5 times compared to the past for the gas, and the same for electricity, because the average price in the last 3 years was 50 euro, and in December we reached a peak of 400, 8 times, but the leverage was 240, 5 times compared to the previous year. So as you can imagine, also the suppliers are requesting to us to recognize the price increase. We are doing the same with our customer. This is a situation absolutely strange because the energy reached level, an unprecedented level. For sure, there are many reasons, geopolitical reasons. First of all, due to the confrontation on Ukraine between Europe, United States, and Russia, and also the delay in the approval of the Nord Stream 2, that is the new pipeline directly connecting Russia to Germany. On top of this, there was the shutdown of several nuclear plants in France and also in Germany. And so these are unfortunately endogenous factors that are affecting our profitability. We are discussing as 100% of our competitors with our customer in order to find a solution and to recover as soon as possible this situation. But frankly speaking, I don't believe that this situation can go ahead in this way. On top of as Endurance, what we are doing, we are trying to offset to reduce the risk for the future quarter, and we are doing swap in order to fix the price because the future, fortunately, of gas and energy are showing us an important reduction starting from September 2022, and also for the next financial year. And for this reason, we are trying to do the swap in order to fix the price that is not at the same level of the past, but not at the same level of the actual market. And on top of this, for sure, we are doing as a medium-term action, we are accelerating the initiative for the installation of solar panel in all our plants. But in the quarter, only for the impact of the energy, we have had an impact of 6.2% of reduction in our EBITDA.
So you mentioned that roughly there's an impact of 2.8 million euros, right, in this quarter?
Yes.
Due to power cost.
Yes. Yes.
Okay. And what was the?
If you consider, that in this quarter we have had a turnover of 47.6%, which is the impact of 6% in our EBITDA.
Okay. And what was the? Can you share the sales EBITDA and the PBT number or PAT number in this quarter in euro terms?
Absolutely, yes. We closed with 47.6 million euro of turnover, with 5.2% of 5.2 million euro EBITDA, 11%, and 1.1 million euro of net result, 2.4%. The same amount, the same data without the impact of energy and aluminum increase, the EBITDA margin would have been 17.8%, completely aligned compared to the previous year. So profitability decreased due to endogenous factors, I repeat. I would be more worried if there was a reduction in our efficiency, but we are maintaining the same level of efficiency as we did of the previous financial year. In the previous financial year, we closed the quarter with 18%, and without the impact of energy should have been 17.8% in this quarter.
Okay. So if I get it correctly, the power cost will probably take some time, but aluminum cost, will that be passed on with the quarter lag?
Yes, in fact, the aluminum is not a problem because we recover every 3 months the increase of the reduction in our price. But for sure, if you have an increase of aluminum, for sure this can impact your EBITDA. In fact, the EBITDA of the quarter has been 11%. Without the increase of aluminum, the EBITDA should have been 11.6%. And so it means that there is a reduction of EBITDA of 0.6% only due to the increase of number, due to the increase of aluminum.
Okay, got it. Secondly, on this drive shaft business that we discussed about in India, can you throw more light, like what business we have got and also in EVs and all, and what's the timeline, especially in the E products over there?
Sorry. No, so basically we're starting with Bajaj Auto in May, and so see the line of sight with Bajaj, TVS, Mahindra. We think we should do about 2,000 million by FY25. That's a line of sight, but it depends on the pickup. So we are starting volumes of the three-wheeler requirements of Bajaj. Advanced stage of talks with TVS as well as Mahindra for 3-wheelers, Mahindra also for 4-wheelers. So volumes are quite good, and as long as the 3-wheeler industry is doing well, and the 4-wheeler also there's a very, very good potential. Yes, because this is a new product we are just starting, but this is a high technology part to be look at the margins. And we identified this because the major competition is GKN and Nextgear. These are actually all both in a way international companies. So there's a very, very good scope for growth. The market in India is about 20,000 million rupees, like I said. And we've already filed 5 patents, which makes our products much more competitive, superior. In terms of safety, we also filed 1 patent for our electronic version, like a lower-cost electronic version. So see, like I've always said, we start a bit slowly, but then we will pick up fast.
Right, so the current business that we got is mainly for your normal, your CNG or petrol vehicles, right? IC engine. It's not for EV right now.
No, right now not for EV, but we are discussing for both TVS and Mahindra for the EV, and of course also in future with Bajaj, because Bajaj will also need it. So the drive shaft is EV agnostic is required, whether it's CNG or it's petrol or it's EV. So it was required for all applications.
Okay, got it. Thank you. I'll join the group.
Thank you. Our next question is from the line of Arun Sharma from Citi. Please go ahead.
Yeah, hello. Good morning, sir. Thanks for taking my question. Sir, first of all would be the question on Indian operations in terms of the gross margin. They have declined, and you cited that aluminum alloy and steel prices have gone up. In the future, do we expect a recovery in these things from Endurance? So can we see a reversal of these cost pressures going forward?
See, it depends on the market. See, steel is already softening, certain steel rates, already softening. Right now, aluminum alloy is not softened, but we'll have to wait and watch. I think the increase in third quarter was unprecedented, if you ask me. So I'm hoping that this quarter there would be a softening overall on the RMC rates. So let us hope for the best. And so as far as the raw material rates, but I'd like to add, as you've asked this question, I'm also one is on the RMC. But the second is, we have lost a lot of our premium business of 150cc plus, including the ABS, where we have a capacity of 400,000 per annum. And like I said, we're selling Royal Enfield. I mean, the orders are full. The problem is the ABS ECU chips. So we will do, imagine against order 35,000, we are doing 10,000. We can easily, I mean, whatever we supply is going to be taken by these customers, by these two customers, So it is affecting our inverted front fork business in India. It is, affecting all the high-end products. In fact, all the products, the front fork, shock absorbers, clutches, brakes, it is affecting everything, the chip shortage. I mean, I was talking to one of our major OEMs. They are losing 40,000 a month on the high-end vehicles because of the chip shortage. And let me tell you, when I talk to OEMs, there's a strong pent-up demand which is building up. And soon as this chip shortage recovery happens, which I think should happen from March, what I'm hearing from OEMs, I think there would be a pretty decent growth from the first quarter of next year. So the issue is, of course, the RMC, maybe a bit of softening, but cannot say. And see, one more thing which happens to Endurance is that in spite of all our consolidation and a strong vendor base, well, the economies of scale, we have bigger plants, which have set up for Hero, one plant in Halol, HMSI in Sanand, and Kolar. And what happens is, when the volumes go down, then the economies of scale, which are great when the volumes are normal, and when the volumes go down, and the two-wheeler industry has really gone down in quarter three. But as soon as it comes back to normal, the incremental margins are great. So that you must keep in mind. And margins also depend on economies of scale in each plant. So that is where we have suffered in quarter three.
Right, sir. Thanks for this. But in the contract, isn't the raw material price a pass-through, or do we take the hit on when? Because
the raw material prices are of course pass-through. Only there is one customer which is lag, which is HMSI mainly, which is the second largest customer. It comes with a 1 quarter lag. Now, what happens is that sometimes there are certain spot increases which I mentioned earlier also. Or sometimes you have certain increases what we face in quarter three, or select increase in our alloy. Now, what happens is that these kind of increases which happen short term, the customer may not pay. So there could be a difference there in spot increases and unusual increases of silicon, which is about 6.5 to 7% of alloy, of aluminum alloy A356 alloy which we use. And so this kind of thing we have to bear. So yes, there will be a small difference. In fact, unusual situations when the increases which happen like this, which we're experiencing since quarter three of FY21. The last 5 quarters have been just crazy, just very, very erratic, which you have not seen. Yeah, so there is a shortage, but normally the material prices are all passed on. There is no issue there. But what happens is a mathematical calculation, which I've always mentioned, that when your RMC goes up, you know what I'm saying, and like it went up. In fact, it went up by almost, I think, 5.8% to sales. Approximately quarter three to quarter three. When these things happen, then of course it also has a mathematical impact, the EBITDA margin, which is a mathematical thing which happens. So you have to see it from that angle also when you look at margins.
Right, sir. Sir, the second question would be on this the new segment. You've already given details about the market size. Is there any market share aspirations that you have for maybe next 1 or 2 years? I'm just looking at ballpark revenue contribution, if there is any target right now.
See, according to me, three-wheelers, though we have two strong competition who are there for years, but as we say, I told you my USP with our competitive pricing, differentiating USP in terms of the performance, the patents we applied, and we have a world-class manufacturing plant. I'd like to invite you to Anuj Aurangabad to see it. It's one of the best, I think the best plant we have in terms of automation. So I think, at least for three-wheelers, I'd like to get maximum market share. I don't want to put a figure, for sure. Four-wheelers will take its own time because, there we are going to go step by step. So of course, it is 3 years I've already indicated you about 2,000 million rupees we would like to do based on the line of sight we have. Okay. Of course, outside uncertainty is not in my control, like I've always said. But of course, the four-wheeler will be a slower pace, but three-wheeler we like to add very fast. The three-wheeler, for sure. It's about 1 million three-wheeler market in India.
Sure, sir. 200 million is the line of sight for this new segment over the next 3 years.
Yeah.
Sir, if possible, just put in one very small question on the Maharashtra government incentive. Is it done for good or can it come back over the next quarters?
No, see, there are two things happening, let me tell you. One is that, now going on in future, we still have, incentive left for the next 3 years. So a similar incentive which was booked in this year will be booked in the next 2 years and a smaller incentive in the third year. This is a 2013 scheme. Having said this, we also applied for the 2019 scheme. Okay, so which is based on, I think, an investment of 3,500 million rupees. So once we cross it should be by the end of this calendar year. So once we cross this figure, then we are eligible for a second incentive in the 2019 scheme. So that we will tell you the details once we get the eligibility certificate. But that way, Anuj is a great area to be in, because whether you invest for electric vehicle or you invest like the electric vehicle incentive in Maharashtra is the same as the PLI incentive. So Maharashtra and especially Bharuch is a great place because you get these mega project incentives, which includes electric vehicle these investments also. So we are in a good place actually, Bharuch Aurangabad. So to answer your question, next 2 years will be similar incentive as you have taken in this financial year, and third year will be a smaller, and plus we hope to add 2019 in future. The details will give you once we get the eligibility certificate, which is the end of this calendar year.
Sure, sir. Thank you so much for answering my question, sir.
Thank you. We'll take the next question from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. First question on the drive shaft business. So, what would be the order book from the Bajaj Auto side of this 5,854 order book which we won in 9 months? How much would be for drive shaft?
So the order book is good, but don't ask me to give you figures. I've got competition to get these figures. So this I will not be able to answer. I can only say that it's a pretty decent order book. So let me leave it at that.
Okay.
Investment unless we see a very good future. I can just leave it at that.
Secondly, Right. Secondly, is there any synergies with the existing business, with drive shaft business, or this is totally different?
Completely a new product vertical, mainly for 3 and 4 wheelers. There is no synergy except that I think, of course, the set of suppliers are also new because it requires different set of suppliers, which is there. I think the synergy could be, I think, in terms of operational efficiency and the support system of our suppliers, some of our existing outsourced suppliers which we can use, but mainly it's a completely new process, completely new operations, completely.
Okay.
And it's a very good high-tech area to be in because the margins are pretty good.
And this product is developed in-house or we have any technology partners for the same?
No, this is all in-house, done by our team. That's why we have filed 5 patents. And I've not been talking about it, though we've been working on this for the last 2.5 years. But now that the plant is set up, we are going to start SOP in May. That's the reason I'm talking to you now. But a lot of work has gone into it. A lot of work.
Right. And you talked about
very good talent in our team. Also.
Got it. And you talked about 200 crores of revenue by FY25. This would be largely from three-wheelers, right? This would not be factoring in
three-wheelers and a bit from four-wheelers. See, as we are speaking, I'm speaking to many four-wheeler companies also and other three-wheeler companies. So right now, I've just told you advanced talks with TVS and Mahindra, and I've told you Bajaj we have got the order. But as we are speaking, the potential is 20,000 million, of course, which is larger in the four-wheeler, I agree. But so we have a long way to go. But this is just an indication, a line of sight which we have.
आपके द्वारा डायल किया गया नंबर अभी व्यस्त है.
Hello?
Yes, I can hear you.
Yes.
So, okay. Second question pertains to the impact of aluminum prices and or rather overall commodity prices in India business, particularly in third quarter, and how do you see that in coming quarter, fourth quarter, given that aluminum is...
In fourth quarter, overall material may soften a bit, because the aluminum alloy has softened in certain areas, but not in all the areas. It has softened compared to quarter three in, say, the larger two-wheeler, three-wheeler application, which is a major business. But then I look at, say, the aluminum alloy business, which is smaller than our whole die casting business. There, because of the silicon, increase, basically a shortage from China. So that is not helping. Though it's softening in this quarter, but yes, compared to last quarter, yes, RMC will soften. Yes, that's for sure.
But the spot aluminum prices have been increasing quite substantially even now. So that should not have any material impact on our RMC in next 6 months.
See, I don't see this quarter RMC doing any worse damage than last quarter. So likely it will soften only. We are seeing a softening in some steel prices and in alloy which we use for 2- and 3-wheeler castings. Definitely we are seeing a softening there compared to quarter three. But I think we'll have to wait and watch. These things are outside our control. And the mathematical effect is totally outside our control, Because mainly, aluminum castings, alloy wheels is a large part of our business, and we use a lot of aluminum in proprietary. So when aluminum goes up like this, it definitely affects our EBITDA margin percentage because of the RMC percentage increase, which happens. But steel, I think overall is softening for sure in steel.
Right. Any sense on how big is aluminum as a percentage of our RM cost?
How big is... Okay, I don't have that figure. I don't have that figure, but I can just tell you that with alloy wheels, our casting business in India is just about 41, 42. About 40%, slightly above 40%.
Yeah, that is large.
Plus, we have some aluminum parts in our front forks, our shock absorbers, our clutch assemblies. So it does impact,
Okay.
Mathematically, it does impact. Except for the spot increases and this one time, like silicon increases we find for a few months. That is something which is sometimes difficult to get, though we are trying to get it.
Right. And can you share the impact for the third quarter? Like in European operations, we had about 60 basis point impact of RM cost. In India operations, any number which you can share, the RM cost impact in region?
No, you are talking about in India now?
India.
India, I would just request Mr. Ray to answer that.
Yeah, here the difference between Europe and India is that as far as our cost is concerned, that hits the bottom line in absolute monetary value. Whereas in India, what we are talking about is when aluminum price changes, we get it back except for one customer, which happens with a time lag of 1 quarter, and there could be some stray cases where this would not come back. So the situations are different here. In India, you see a profit drop because of the fact the margin drop is explained partly by the fact that there has been a huge increase in our raw material prices, quarter to quarter, aluminum and steel. But if you want to understand rupee drops, you go back to what Mr. Jain said in his initial remarks, that on one hand, the prices have gained. So the sales in rupee value don't look too bad. But the volume drop has been substantial, and in that volume drop, we have lost some high-end products. So there's a mixed effect also. So that's where we have lost out on the rupee value of EBITDA. So Jignesh, that's the answer to your question.
Okay, great. Thanks. I'll fall back in queue.
Thank you. We'll take our next question from the line of Ronak Sarda from Systematics. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, firstly, just on Europe, first, just a clarification. I didn't get what Massimo mentioned. So this power cost is a one-time impact, or this will continue till quarter 2 of FY23? The 6%
Okay, so I request Massimo to clarify that. Massimo?
Yes. So as I told you, we reached the peak in the month of December for gas and electricity, 166 euro per megawatt for gas and 400 euro per megawatt for electricity. But I can tell you that in this moment, in the month of January and February, the leverage is 100, 105 for the gas and 240 for the energy cost. And so it means 5 times what we passed. And so the situation continues to be very tough. And frankly speaking, I believe that if the government don't solve the problem with the Ukraine situation today, probably the situation will remain at the same level in the next period of time. For this reason, it's absolutely important to understand what we can do with our customer, and we are discussing with them.
So for the next, maybe a couple of quarters, we should assume the current run rate of margin at around 10 to 12% as a steady state margin. Will that be a fair assumption?
This is a correct question, but frankly speaking, you have to consider that in the third quarter 2021-22, we have had not only the impact of energy costs. Please consider that in this quarter, the market lost 24%, 23.4% compared to the previous year. And if you analyze the quarter, compare 19-20, so I'm speaking about before the COVID crisis, let me say, we lost in the European market 30% in the Q3. And so it's only to tell you that for sure there was an extraordinary increase of the energy cost that is unpredictable. But in the same time, we have another factor, an important reduction of volume. In the first quarter of this financial year, fortunately, we are seeing an important increase in volume. So I believe that we reached the lower level of volume after 14 quarter of continuous reduction of volume. And so I hope that with the increase of volume, we can compensate part of this increase of energy, and we can improve our profitability.
Right. So as volumes increase, we'll have some benefit of
effect, the reduction of volume and the increase of energy. If we are able to recover the volume at the end of the day, for sure we can recover also EBITDA and profitability.
Right. So with volumes recovering, we'll have some benefit of operating risk.
That Massimo, in quarter 4, the energy prices are a bit lower than quarter 3, right? In quarter 4.
It's lower. If you consider the leverage, as I told you, if you consider the peak of December is more or less 40% of reduction. But in the first quarter, in this moment, we are seeing a price that continues to be 5 times compared to the leverage of the past for gas and also for electricity.
Yeah, so it's more than the past, but maybe slightly lower than the peak of quarter 3.
Absolutely, yes.
Okay.
Right. Got it. Thanks for that, Massimo. Another the other question on the India business for you. I mean, I understand the impact of commodity. So 2-part question here is, one, if I look at on a quarter-on-quarter basis, from September to December quarter, the volumes have actually improved. For most of the two-wheeler manufacturers, if I look at Bajaj, Royal Enfield, as such. But the impact of commodities is that the major cost of commodities have come in this quarter, because commodities have been increasing for last 4 to 6 quarters as such, and we have able to navigate the impact, and we understand the numerator impact as well. But quarter-on-quarter volumes have increased while your commodity costs look to be very sharp increase. And at the same time, our top line has not seen a jump because otherwise, if there was a pass-through impact, we would have seen the sales volume, the top line should have been higher as such. So is there a one-off in this or?
No, I'll explain to you. See, the quarter 3 two-wheeler volumes were down by 19.7%. Every two-wheeler manufacturer has gone down in quarter 3 compared to quarter 3 of the previous year.
Last year, yes.
Okay, it is Bajaj is down 6.1%. Hero is in fact down 11.8%. Honda is down minus 13.8%. TVS is down minus 8.8%. Yamaha is down minus 7.6%. And Royal. So what I'm trying to tell you is that there is a degrowth with every OEM. Okay, so one part is that. Okay. Now, what is happening with this volume? Most of my products are really the premium products, the value add, which is 150cc plus, front forks, shock covers, brakes, all have taken a beating on sales. Okay, so what you are seeing is sales value up because of 5.8% of sales increase in RMC. RMC, which was 62%, is now 67.8%. So this, forget the mathematical thing, but this I call it an artificial increase in raw material. It's only an artificial increase of commodity. It's no value add for us. So actually the sales value is looking better because of this raw material 5.8% increase, but the volume will actually drop. And in all the premium products, with the chip shortage affecting ABS and all is mainly in the 150cc plus. So I hope that the chip shortage improvement I'm hearing from March, and I hope that happens, then all these volumes will go up. Okay. Plus, I also believe that the COVID-19 also, this sentiment, especially in rural markets, they see a huge beating which Hero is taking, HMSI is taking on scooters. Once the sentiment improves, the employment improves, I think rural market, the lower two-wheelers should also do well, because I'm an optimist, and because I've gone through, a lot of ups and downs in this 34-year journey, so it has to come back. And most OEMs I have talked to, I think there's a huge pent-up demand building up, because of this reason. Because the demand is there. They are not. My major OEMs, they are losing 40,000 a month, of mainly in the 150cc plus segment. So what I'm trying to tell you is, this sales which you see value is because of the RMC. The volumes are dropped. That is where I'm losing my contribution. Secondly, the economies of scale which I get in my Sanand plant, my Kolar plant, my Halol plant. The economies of scale, either your profit can go down below a certain level, though we have lowered the break-even points, or it can incrementally go up once it goes back to normal. So we have to see the plant-wise also margins, here.
Right.
That's why our focus in endurance is to make our such plants multi-OEM and multi-product. Multi-OEM and multi-product, which means do more than one product in the plant. So that's our focus for the future, to take care of these risks.
Right. So the question was again, because if I see your last 6 years of history from listing, we have always delivered very stellar margin performance, especially on the gross margin side. So once the volumes recover, we can easily go back to this 14% EBITDA margin mark. Is that a fair assumption?
Yes. Once the raw material go back to normal, I've already told you the range. That's no issue for us. Even if you mathematically do it, you will get margins like that, 13 and 14. Even if you mathematically do the working yourself, you should get the similar margin.
And a couple of data points. So what was the Maharashtra incentive in 9 month FY22? And if you can,
See, we got it in the first 6 months only. I think what I know is we have booked, 590 million rupees. How much have you booked, Satraji?
590.4.
Yeah, 590.43, and I said similar will be booked in the next 2 years, where FY23 and FY24 and FY25 will also be booked with a smaller figure. But like I said, that we have already applied for the 2019 scheme. That eligibility will get end of this calendar year once we reach an investment of 3,500 million rupees. in the area of Aurangabad, in the Zwaloj Aurangabad area, which we hope to do it by the third quarter of the next financial year. So that will be, of course, extra to this.
And how is the ramp up for Hyundai and Kia and the four-wheeler aluminum?
So that ramp up is happening well in our Vallam plant. We are increasing our sales with Hyundai, Kia, as well as for Royal Enfield. We have won the non-automotive business for Aptiv and Generic, which will be additional order of 1,000 million, which I said. That will also start from April 22, what I'm told. So Hyundai, Kia is doing well. A new order of TVS for 1440 million rupees starting from June in a phased manner is also there, which is a good business to win. So I mean, we are going all out, after business, So already in 3 quarters, we have won more business wins compared to the whole year of FY21.
Right. So, I mean, I wanted to understand the ramp up. So, is it now the plant is also breaking even in that sense, or it's still in the ramp up phase?
So these plants, but what happens? Sanand, Vallam, as well as Narsapur and Kolar, all are doing okay. But the question is the incremental profit margins which we have been doing, which is basically on volumes. See, the RMC impact will be there with the percentage to sale increase, but the volumes make a big difference in the economies of scale and incremental margin. So that is what we are looking to get back with a better situation after the COVID goes down, sentiment goes up, and the chips increases, because chips is it's a very important thing for us. I mean, this is the last of the things we expected. If you ask me, after the first quarter of this financial year, but chip shortage has become a major concern. We never even dreamt of it. And imagine I have a ABS, orders of whatever I can supply. Even if I have 40,000, I can supply 40,000 a month. I'm doing 10,000. I have a full plant which is ready. You can imagine what we are going through. Same with inverted front fork. Full plants are ready, but not we are losing 40,000 a month of such orders. I mean, 40,000 vehicles requiring inverted front forks. So but I just hope it goes back to normal fast, because I've always said since the IPO, external environment is not in our control. We can only do our best in the company.
Of course. So, and the final question, just in your opening remarks, you highlighted the new order from EVs. I missed the number, so you said from Ather and Polarity. So, can you just repeat the number?
So basically, I'll just go to that. So, just give me a minute. Just find it. So we have won about 1,390 million rupees of orders, including from, of course, Ather for the brakes largely, and there's a company called Polarity, is coming up with smart bikes. And I believe the Maharashtra government has waived off for the first 70,000 vehicles the GST also. And it's a very low cost, I think, smart bike is 40,000 rupees. It's a very good bike. That's why they're getting this kind of, GST incentive. It's in Jharkhand, Pune. And they're starting, I think, in the second half of the next financial year. Is what I think it's next financial year, I think so. It's in FY23. So it's a good order for brakes and suspension and Ather brakes. But like I said, we hope to give you all of you more good news. We are engaged with each and everybody. I've mentioned the names also. So we are very, very much targeting, the EV market. And like I said, also looking at new products apart from the drive shaft. So we are at quite advanced stage even in there. So whenever it happens, we will let you know.
Mr. Ronak Sada, I'm sorry, may we request you to return to the queue, as there are several participants waiting for their turn. Thank you. Ladies and gentlemen, we would request you to please limit your questions to 2 per participant, so everybody gets an equal opportunity to ask questions. We'll take a next question from the line of Aditya Jawar from Investec Capital. Please go ahead.
Yeah, thanks for the opportunity. Sorry for asking this question again on margin. So, Amran,
sorry to interrupt, Mr. Jawar. If you're in a hands-free mode, can you switch it to handset mode, please? We can't hear you that well.
Yeah. So, yes. Can you hear me now?
Yes, thank you.
Yes. So, first question is on margin. So, in this quarter, you mentioned that you saw unprecedented increase in commodity inflation. So, HMSI, we understand that it's a 1 quarter lag, but due to the stress in the two-wheeler industry, are there certain other customers which have postponed taking on price increase, or there's a possibility that they might not go with the price increase?
It looks like Mr. Jain's line has just dropped out. Ladies and gentlemen, we request you to please remain connected while we rejoin Mr. Jain. Mr. Jawad, please remain connected. Ladies and gentlemen, thank you for your patience. We have the line for Mr. Jain reconnected. Mr. Jawad, you'll have to repeat your question, please.
Yeah, sure. So on margin again, so is there an element of unabsorbed commodity inflation, and that is not being able to pass on? Either some customers have requested, so other than HMSI, some customers have they requested for a delay in accepting the price increase?
No, all customers have agreed. But of course, like I said, the price increases are given by what competition and what they think. I may ask for 25, they will give me 23, so that is possible. But that could be a small loss sometimes. But definitely the spot increases, and I said silicon type increases for alloy wheels, which are for a few months. These are tough to get. We try our best to try and get them. And of course, HMSI lag also has. We have lost out there in quarter 3. We hope to get that largely back in quarter 4. RMC is a pass-through. I mean, see, this is an unprecedented situation of the last 6 years. I've never seen such kind of increase in the last 5 quarters as I'm seeing it now. It's just unbelievable.
Yeah, sure. And congrats on this acquisition of the software platform in Italy. Can you help us understand the broader thought process? Is there an element of getting the product in India and expanding, our hardware capability to include more software and then possibly even expand to electric vehicle component? What is the broader thought process on the software platform acquisition?
Yes, I request Massimo Benuti to explain that to you. Massimo?
Yes. So, Endurance Overseas acquired 100% of stake in Vehicle SRL on 12 November 2021, as Mr. Jain told you, for 0.7 million euro. Vehicle SRL is a small software company and provider of fleet management services. Its software platform is able to manage fleet operator increase efficiency and also improving cost fuel consumption, maintenance, and also the capacity to drive the style of driving and also activity linked to the safety perspective. We believe that this acquisition can allow to Endurance to have a different vision about the new mobility. For sure, this is a small company. Only to give you an idea, in the previous financial year, January-December, they had a turnover of only 500,000 euros, with an EBITDA of 70,000 euros and net result more or less zero. We bought the company for one reason. We met them, the previous owner, because this company has only 3 employees that are also the founder of this company. Because we believe that we can make a synergy in our activity due to the fact that the software start to be strategic not only for the future mobility but also for our existing business, considering that we are developing after the acquisition of Adler and we make a lot of activity in order to enter in the aftermarket for the brake system and clutch. And also because, as you know, as Endurance Overseas, we are absolutely specialized in the high level of automation. And today, 90% of our machines are completely dependent on software. And so I always be sure that it is absolutely important to start to have this knowledge inside. But for sure, our expectation is to grow also in their specific business. And so now we are preparing a business plan with the previous owner, our team, in order to understand as we can reinforce the commercial activity, hiring people, and to try to increase our turnover and to prepare a business plan for the next 24, 36 months and understand which is the potential power of this company into the market with behind a strong company from the financial point of view as Endurance. This is the strategy.
Sure. That's helpful, Massimo. Just a final question to Mr. Ray. Sir, in this quarter, we have seen a decline in depreciation sequentially, both for the India and European operation. Could you please explain that, and should we take that the current quarter run rate as a more sustainable number?
No, but depreciation, if you look at this quarter, in India, the depreciation, what's the difference that we are talking about? Just a second. This quarter, the depreciation that we booked is 50.4 crores, and last year quarter was 52.6 crores, if I remember correctly, quarter to quarter, right? Yes. This has an impact because if the number of dies, dies follow a different pattern of depreciation vis-a-vis other assets. It's based on the number of shots and the depreciation percentage that compared we see whichever is higher. So if die depreciation reduces due to lower volume in our die casting plants, you will see an impact like that. So therefore, there's nothing more to be read here. Sure. Quarter 3 FY21, the volumes were great. So that's why you saw 52.6. Quarter three this year, the volumes are not so great. So you're seeing 50.4 on account of lower die depreciation.
Sure. That's helpful, sir. Thank you, and all the best.
Thanks.
Thank you. Our next question is from the line of Pramod Amte from Untitled Capital. Please go ahead.
Hi. This is with regard to the new drive shaft business. If I understand rightly, you are more of the stationary application supports, and this is a more power transmission component you are picking up.
Yes.
So in that sense, will you be buying the forgings for this, or will you be making in-house? And second...
The forgings will be bought from outside. We'll be doing only the subsequent machining operations, the surface treatments, as well as the assembly.
Okay. And will it also expand your scope, considering that you are now entering into power transmission type of products? Will it improve your engineering capability and hence your addressable market? You can look into more newer products like this?
Yes, of course, and that's what we are doing. Right now, we are in the process of doing, quite a few products, which we are really studying. Some are at a very advanced stage for the future, and which are also EV agnostic or required for EVs.
Okay. And would you like to name a few of them? Because it's a wide gamut of things, right? Once you touch that power transmission.
That's why I didn't name you the drive shaft for last 2.5 years. I cannot name the products because it's too sensitive for the competition and other things.
And one more question is with regard to the aluminum cost pressure. Even though the other commodities seems to have come down, so aluminum still seems to be inching up into a new territory altogether. So in that context, considering that many of your customers and you being one of the large aluminum suppliers, how do you see your process improvements to reduce the consumption of aluminum? One, and does that give you any competitive advantage versus your peers to reduce the content of aluminum and hence position yourself in a better manner to the OEMs?
Yeah, see, we are doing two things. One is, of course, on the operational efficiencies in terms of OE, operational equipment efficiency, how we can lower in-house, I would say, scrap rates. Because once you have higher scrap rates, it goes for remelting, which requires more aluminum because of the melting loss which you have. In the remelting. How we can reduce the in-house scrap rates and focus on all our die casting plants, all. We are really working very closely. I have my own monthly review to improve the efficiency. At the same time, our casting engineering and tool room is working on the product design as well as the dies. How we can lower the weight of the castings. And that's why we are also looking at multi-cavity dies instead of single-cavity dies also. So the gross weight per shot comes down when you have a two cavity compared to a single cavity. Also, even if it's a one cavity, trying to lower the weight of the casting through value engineering. So there's a lot of work which is going on already. We have implemented it in many of the castings. So this is a continuous process. So this has been happening for many years. And we have a very strong, I would say, casting engineering center and tool room in Pune. So there's a lot of work going on there.
Thanks for all the best.
Thank you. Ladies and gentlemen, that was the last question. I would now request the management team of Endurance Technologies to give closing comments. Over to you, sir.
No, I would just like to say that these are unprecedented times. Never seen such kind of raw material increases. Not seen such kind of power cost increases in Europe 5 times. And we keep doing our best to maintain operational efficiencies and also most competitive buying from our strong vendors which we have. And I can only say we keep doing our best. Only that the outside conditions are not in our control. We can't do anything about it. So please look at Endurance always in the long term and not in the short term or one quarter. That's what I'd like to say. But anyway, thank you all for all your support. And again, I'd like to invite all of you to Waluj Aurangabad to see our new drive shaft plant and an extract to whoever has not seen it. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.